The UK's economy is struggling when we look at various metrics, which led to the Bank of England cutting interest rates again on the 6th of February 2025, and with billionaire Ray Dalio going as far as to say that the UK government risks a death spiral if it isn't careful and doesn't manage the economy carefully. So in this video, we're going to be looking into this in more detail to see if there are any positive signs for the UK economy at all, and the latest plans the Labour government has under Keir Starmer and Rachel Reeves to try to grow the economy. So please do like the video and subscribe to the channel so I can continue to offer more content for you in future. If you follow our social media channels on X, Facebook or Instagram, you'll receive daily crypto and financial education news update posts, which will keep you informed and updated about what's happening. Stick around to the end of this video to find out what services CoinKnowledge offers. Just a quick reminder that nothing contained here is financial advice, and let's jump straight in. Firstly, let's take a look at GDP, or Gross Domestic Product, which is basically economic growth or economic value added through the production of goods and services in the UK. And what we've seen in the UK is that real GDP, which is an inflation-adjusted measure, is estimated to have not grown at all in the 3 months to November 2024. So September to November 2024, compared with the 3 months to August 2024, which is June to August. The Bank of England on the 6th of February 2025 therefore announced that it was halving its growth forecast for the year. As you can see here, it estimated in November 2024 that the UK's economy would grow by 1.5% in 2025, but is now saying that it expects just 0.75% growth. However, it has upped its predictions for 2026 and 2027, expecting this to increase by 1.5% from a previous prediction of 1.25%, with Keir Starmer coming out and saying that he wasn't satisfied with growth and that this downgraded growth just spurs us on, and that they need to push further and faster to ensure economic growth in the UK. But when you look at the latest Industrial Trends Survey by the CBI, which is the Confederation of British Industry, there's an awful lot of work to do, because in January 2025, more manufacturers thought that output would decrease over the next 3 months, with this standing at minus 19%, which is admittedly an increase on December 2024, which was minus 31%. But you'll see that it hasn't been as low as this since the financial crises in 2008 and 2020. And if we look at consumer confidence through the GfK Consumer Confidence Index, that's actually been running since 1974, you'll see that this has started to fall again recently, decreasing to minus 22 in January 2025, down from minus 17 in December 2024, with a downward trend in consumer confidence since 2015 to 2016, which was one of the only times that it was actually positive, and with all measures in January 2025 actually down compared to the previous month of December 2024, as you can see here, apart from the savings index at the bottom, which is up, which isn't actually a good sign because it indicates that more people are looking to put money aside or save it as they worry about their finances moving forward and the health of the wider UK economy. If we look at UK borrowing now, so the difference between public sector spending and income, well, this rose significantly more than expected in December 2024, when this was £17.8 billion, rather than the forecast of £14.6 billion by the Office for Budget Responsibility, or OBR. This was £10.1 billion more than December 2023, and was the highest December for borrowing in 4 years. The interest payable on this large government debt was £8.3 billion in December 2024, which was £500 million more than the £7.8 billion that was forecast by the OBR. This was actually £3.8 billion more than in December 2023, and was the third highest interest payment in a December since records began in January 1997, with the public sector net debt, or PSND that you can see here, being equivalent to 97.2% of GDP at the end of December 2024, up from 96.9% at the end of 2023, which is an increase of 0.3%. And this currently stands at levels last seen all the way back in the early 1960s. With the other line here, by the way, PSNFL, standing for Public Sector Net Financial Liabilities. And you can see that the debt to GDP ratio in the UK was about 30% at the end of the 1990s and 2000s, showing the huge increase in debt in the 2008 financial crisis and then 2020, which is obviously a huge concern with inflation, which we will come to in a bit. And just to explain this a bit, this basically means that government debt stands at 97.2% of all GDP, or growth provided by all goods and services in the UK, so not far off 100%, or debt cancelling out all growth. And as we discussed the large increase in UK borrowing, we should take a look at the bond market, which reflects this also, because the yield on a 10-year UK government bond, or gilt, surged to its highest level since 2008, with you being able to see the large increase since 2020 here, while the yield on the 30-year bond, or gilt, rose to its highest level since 1998, and again you can see the increase here since 2022. This means it's costing the government more to borrow over the long term, and when you compare Rachel Reeves' autumn budget from October 2024 to Liz Truss's mini budget from September 2022 that caused havoc and nearly crashed pension funds with the sudden increase in bond yields, Rachel Reeves' budget has instead increased yields slower and over a period of months, with markets and lenders looking for stability. So it will be interesting to see what happens here in the months to come. And as I previously mentioned borrowing and debt to GDP, let's take a look at the UK M2 money supply, which is one way of looking at basically how much money's been printed or added into the financial system, with this being over £3 trillion as of January 2025, which is an increase of 2.2% from 1 year ago. And you can see here the increase in the UK money supply just in the past 6 months. But when you zoom out further, you can see the huge increase in money supply in the UK a bit clearer, which hit £500 billion in early 1994, then £1 trillion in early 2004, so 10 years later, then £2 trillion at the end of 2009 in response to the financial crisis, then £2.5 trillion at the beginning of 2020, with it standing currently at over £3 trillion, which just shows the huge amount of inflation and decrease in purchasing power of the British pound and this fiat currency. And given this huge increase and the large increase in government bond or gilt yields, let's take a look at UK inflation, so the Consumer Prices Index or CPI, because this unexpectedly decreased in December 2024, with prices rising by 2.5%, down from 2.6% the month before, but still being 0.5% higher than the Bank of England's target rate of 2%. The Bank of England expects inflation to increase to 3.7% and not return to its target of 2% until 2027, citing higher energy and water bills and possible US tariffs imposed by Trump and his administration, with Andrew Bailey, the Governor of the Bank of England, mentioning this in his opening remarks during the Monetary Policy Press Conference on the 6th of February. So let's now take a look at interest rates, because the Bank of England announced on Thursday the 6th of February that it was lowering interest rates from 4.75% to 4.5%, which is the third interest rate cut since August 2024 and is at the lowest level for 18 months, probably following the lower than expected inflation from December, but also reflecting the concerns that the Bank of England has about the UK economy and growth, with the Bank of England saying that future rate cuts will have to be decided on a meeting-by-meeting basis, using words like gradual and careful, because of the obvious risk of higher inflation, because we know about the large increase in inflation that people have experienced, followed by the increase in interest rates. So this will be a balancing act for the Bank of England, as they won't want inflation to increase any more than it currently stands, given its target of 2%. And it'll be interesting to see the next report on CPI, which will be released on the 19th of February with January 2025's figures, to see if this has started to increase again, which might indicate that the Bank of England will keep interest rates where they are at 4.5% in its next meeting on Thursday the 20th of March 2025. If we then compare the British pound, or GBP, against the US dollar, we can see that the pound has generally been falling against the US dollar, with this graph going back to 1971, when $1 was worth about £2.60, whereas today it's only worth about £1.23. Since October 2023, the pound has actually done well against the dollar, but that is quite deceiving because the low you can see here on the left has only been lower than that once before in 1985. So it's always better to zoom out and look at this over a longer time frame. And if we compare the British pound against the euro, it's a similar situation in the sense that the pound has generally depreciated against the euro since 2000, with some differences, such as the appreciation of the pound in 2015. But since 2017, the British pound has actually done quite well against the euro, despite it being well down overall compared to 20 years ago. So are there any positives for the UK economy at all? And what are Keir Starmer and Rachel Reeves' plans to grow the economy? Well, the UK government announced on the 13th of January 2025 that it planned to invest heavily in AI as part of a new action plan that creates specific and dedicated AI growth zones in the UK to speed up planning for AI infrastructure, invests £14 billion that will apparently create 13,250 jobs, and takes advantage of large AI companies that have a presence in London, including Google's DeepMind's headquarters, OpenAI, Anthropic, Microsoft, and Meta AI offices. They're also changing the visa entry rules to encourage top talent in AI and medicines research to come to the UK, and the £14 billion that's planned to invest into AI in the UK is obviously a large figure, but the question is if the UK can keep up and compete with other countries, given that Saudi Arabia has just announced that it's partnered with the large tech firms Google, Lenovo, and Alibaba, and will invest $14.9 billion into AI. Emmanuel Macron has just announced a €109 billion investment into AI for France, and Trump announced at the end of January that the Stargate project would be launched with tech giants such as OpenAI that will see $500 billion invested into AI in the United States over a period of 4 years. Keir Starmer then said on the 6th of February that he planned to change planning rules so new small nuclear power stations could be built in England and Wales in order to make the UK one of the world leaders on nuclear, helping to create thousands of highly skilled jobs and boost economic growth in the UK. And he said that he would speed up the average 20 years it takes to go from the planning stage to opening a nuclear power station. Starmer then said about Donald Trump's drill baby drill statement, build baby build. I say we're going to take on the blockers so that we can build, with billions of pounds actually already going into new nuclear sites that had already begun under the last Conservative government. So that's looking at a few positives for the UK in terms of investment and growth, which is quite difficult when you see news like this, with the UK telling Apple to give it full access to encrypted data of users that's stored on Apple's cloud under its Investigatory Powers Act of 2016. And this hasn't been asked before to this level, with governments normally asking technology companies for user data to solve criminal cases, not a blanket coverage of all users' encrypted data. So this is disappointing to see. And finally, given this channel is on crypto education, we'll have to see what crypto regulations actually come into force in the UK, which they say will be fully implemented by 2026, which is still a large concern when you look at the FCA and what it could have accomplished in the last few years already in the UK, with the US now pushing ahead here. So to summarise this video and the state of the UK economy, we're seeing little growth, high borrowing, a large number of successful companies and individuals leaving the UK or its financial system, which I'm actually going to provide specific examples of in our next video, low manufacturers and consumer confidence, high debt to GDP, rising yields on UK government bonds or gilts, a large increase in the UK money supply, inflation having decreased and standing about 2.5%, 0.5% above where the Bank of England wants it, decreasing interest rates down to 4.5%, a depreciating British pound against the US dollar and euro over the long term. But with the Labour government trying to appease these issues, with the announcements and plans like I've just mentioned. So that ends this video. And as always, I'd love to know what you think about the state of the UK's economy in the comments below. Just a reminder that if you're interested in more of a tailored approach to your crypto education, and you think you'd benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. You can sign up for a free account with Coinly using the link in the description to this video, which is one of the best automated crypto tax platforms out there. If you're looking for more specific crypto tax advice based on your personal circumstances, I've partnered with a leading crypto tax company in Myna, which is part of the company Nephos, that offers other services such as wealth management, restructuring, offshoring, etc. But I'll leave a link to contact them directly in the description to this video. I've also included a link to Trezor's website in the description for anyone looking for one of the best hardware wallets or cold storage out there, with 2 new models released recently in the Trezor Safe 3 and Trezor Safe 5 that I actually did a video on recently that you can find a link to here and in the description. And finally, if you're looking for a portfolio tracker for your crypto portfolio, then I've included a link to CoinStats in the description of the video, which is the leading crypto and Bitcoin tracker on the market. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.